Good morning, everyone, and welcome to Openpay's special investor briefing today. My name's Jane Lowe, and I'm the Managing Director of our department. It's a pleasure to be here with the team to update you on Openpay's international expansion plans following what has arguably been a strong period of business performance and a hugely exciting start to Openpay's US operations. Presenting today will be Group CEO and Managing Director Michael Idle. Morning, Michael.
Good morning, Jane. Good morning, everyone.
CFO Jussi Nunez. Morning, Jussi.
Morning, all.
And US CEO and Global Chief Strategy Officer Brian Schneiderman. Afternoon, Brian.
Afternoon, evening.
So Michael, Jussi and Brian will talk to the key highlights of the presentation that has been lodged with ASX this morning. It's also available via Openpay's website. The formal part of this session will be followed by a Q&A. With that, I'd like to now hand over to CEO Michael Idle. Thank you, Michael.
Thank you, Jane, and good morning, everyone. Last week, Openpay announced a circa $67.5 million funding package to support our company's growth strategies, comprising a new $25 million corporate debt facility, circa $37.5 million through an institutional placement, and a non-underwritten share purchase plan to existing eligible shareholders of the company to raise another around $5 million, which will open later this week. The funding package followed a major partnership announcement outlining the collaboration agreement for the platform integration and merchant acquisition with a leading global payments provider with immediate focus on the USA and subsequently other existing and future Openpay markets. The funding package underpins our accelerated US, UK, and Australian expansion plans and enables the company to focus on the rapid growth of market share and to build on recent strategic partnership wins with aggregators, enabling scale in our specialized verticals within target markets. The purpose of this call this morning is to provide investors with more insights to the massive US opportunity for our differentiated Buy Now, Pay Smarter product and the progress on our launch plan, which Brian will talk about. Jussi will then briefly touch on our overall funding position to accelerate our international expansion and provide the terms and conditions to the upcoming share purchase plan. Starting now the presentation with page 3. In an increasingly crowded and convoluted Buy Now, Pay Later landscape, I often get the question what differentiates Openpay from our main competitors. You see this on the left. We provide the smarter way to pay with our Buy Now, Pay Smarter product in B2C, which is typically larger in value and longer in duration than our competitors. And it is interest-free, so no hidden catches, different to other longer-term products with quite horrendous interest rates. We offer these plans in verticals which matter to people, including auto, health, and home, absorbing bill shocks and unexpectedly high expenses like dental treatments, and empower people to take control of their cash flow. This has meant we have been able to carve out an attractive, increasingly recognized place for ourselves in what is otherwise, as I said, a busy Buy Now, Pay Later market. And secondly, to the right, enterprise merchants can manage trade accounts for their business customers end-to-end using our B2B product. OP Pro, which has had a name upgrade from Openpay for Business, is a fully digitized software as a service platform. Woolworth, as you may know, are the first to have started using it at scale, and we are working hard right now to convert additional B2B relationships on this innovative platform. I will now hand over to our US CEO, Brian, who will discuss the huge opportunity we see ahead of us in the US. Over to you, Brian.
Thank you, Michael. And we'll go to the next page, please. So I think it's really important that we establish some of the big trends that are going on as we enter the US market and really embrace this new strategy that as the Global Chief Strategy Officer, I'm implementing in all of our markets, but really sort of with that as our global theme, acting locally within the US. How is that applying itself? Well, let's take a look at what's happening as it relates to traditional payments. What you see here is that credit card spending is declining pretty significantly. If you're a credit card company, one of the big issuers in the US indicated to me that they're now seeing 10% of their receivables in the buy now, pay later space. So it is very, very important. And it is now no longer acceptable for the merchants and increasingly the banks not to pay attention and actually offer buy now, pay later options. So what you see on the right is conversely, the growth in buy now, pay later, healthy in all of the different segments. Now, I think that, there is a strong skewing towards, one of these segments, the Gen Zers, but make no mistake, it is growing among even the older, more mature buyers, consumers in the market. The buy now, pay later share of online checkout is going to quadruple in North America by 2024. That is a consistent analysis that we see from a number of sources. And most of the existing solutions that are either pay in four or are long-term with interest are expected to actually be replaced. And I can talk a little bit about that more. So the reasons for the shift: people are avoiding interest. They're making more out of budget purchases. Particularly in the United States, it is a very, very sensitive area around healthcare and the issues that people face with declining coverage and increasing costs out of control. This is a major market opportunity for us, and we're already seeing significant progress, as you'll see a little later, in our healthcare space in the US. So Gen Z, one of the fastest growing consumer segments for buy now, pay later. They have a very high aversion to debt and very tech savvy. So very good population to focus on. Okay, let's go to the next slide. So what you see here is that there is this incredible opportunity with $5.5 billion, trillion, $5.5 trillion in the US, which is a subset of that global market, broken down into what is our estimated target market. Okay, so for us, there is an 829 billion addressable market. But when we start looking at the verticals that we focus on first, I'm going to come back to that in a moment, this is how those markets break up. So I'm going to start with healthcare. Clearly, by almost twofold here, the largest among our vertical focus areas at 218 billion. Home improvement, 78 billion. Education services, 89 billion. And auto repair and maintenance, 65 billion. Now, what's important, coming back to the top, that 379 billion, which is big ticket retail, that is anything within retail, and it could actually relate to one of those other verticals, or it could be something in a completely different area of retail. Here's why that's still part of our target. Once we've given somebody a larger, longer-term loan, for example, and they've enjoyed working with Opie, that person can then take us and use us in some of those big ticket retail environments. So we've got a great customer who we know, we've brought through some of our lowest risk verticals, and we can pivot. For those of you that have been watching following along with our 6-pillar strategy, we can pivot a lot of those customers to then offer them big ticket retail items. There's also the opportunity to bring in net new customers directly into big ticket retail. A good example of that might be bundling, something that we work a lot with the merchants on, where somebody comes into a big retailer and we would offer them, maybe in advance, the opportunity to build a nursery. Here's $2,500. Go buy the crib, get the diaper genie, get the rocking chair, the mobile, all those things. You are approved for up to $2,500. That is a really good example of how we can take a retailer that has lots of small items and focus people onto the larger, bigger ticket retail items. Of course, you have the TVs and the things that are in and of themselves very expensive as well. So this shows you the market. It shows you what we're laser focused on and how we're evaluating and now going into sub verticals within these, which is very important. Okay, let's take a look at the next slide. What we show you here is something we call going after the bigger, more important items in people's lives, rather than just trying to sell loans, buy now, pay later to teenagers who are buying t-shirts and tennis shoes. Why is that important? There are a lot of providers out there, the pay in 4 providers that are essentially giving millennials and such the opportunity to get to loans that they couldn't afford. One of our competitors mentioned that their sweet spot, their pay in 4, is to provide buy now, pay later to teenagers and early 20-somethings that cannot qualify for private label credit cards. Very different market. Whereas you look on the right, we can go, yes, into retail, and you see the woman on the bottom left, and some of these items might be smaller, relatively speaking, all the way to the complete kitchen, bath remodel on the top right, up to $20,000. And so we're able to travel with the consumer from those products that are within our sweet spot, but are smaller, to the larger ticket items in the top right. And certainly you see veterinarian and you see these other areas. The other thing that I'll note is many of these categories are very meaningful to the person. They're not a transaction where they're going to get a pair of tennis shoes and they probably don't have an ongoing relationship with that merchant. In fact, if you look at our verticals, whether it's your relationship with your educator, your contractor, your dentist, you might be the 2nd or 3rd generation going to that dentist. These are meaningful lifestyle relationships. It's really important because that helps us drive down our risk, which enables us to give this incredibly low priced product, very simple fee, non-interest rate based product. Well, let's go to the next slide. So when we talk about the benefits to the merchants, it's very important to understand that the simplicity of our product, where it doesn't change each period and the consumer continue to plan on exactly how much that's going to be, $10 each time they make a payment, $15 each time they make a payment, whatever that is, it never changes. If they miss a payment, it doesn't change. So it is incredibly good not only for the consumers, but for the merchants to provide something that's that simple. Now, what we see is that consumers that use these products purchase more frequently, they're more elastic, so they're less price sensitive, and they're tending to buy a bigger item, a bigger shopping cart, if you will. So it is a great product for the consumer, it's easy to explain for the merchant, and it helps generate sales for the merchant. Let's go to the next slide. So this is the 6-pillar strategy, and I know that some of you have been on these calls before, so bear with me if you've seen this before. In order to be successful in the United States, and much of this also translates to our global strategy, but to be successful in the United States, I laid out a 6-pillar plan and said, each time we check these off, we're going to remind you of our progress. By the time we've checked off all of these, we will be successful. And so what you see is an update that we're providing all of you to follow our progress here. All right, so the first one, the leadership team. We've brought on board some of the most well-known leaders within the banking, regulatory, merchant space in the United States. So we've got a very well-known team, really reduced our risk there and brought in some great talent. The second one, launching a wholesale strategy with the merchants, where we establish a relationship, for example, with a dental service organization that brings 1,000 dentists that each have 1,500 customers. That represents 1 million consumers or patients that are accessible to us through one relationship. Those are the type of aggregated relationships that Pillar 2 speaks to. We have very good progress in that category. The third pillar is the large-scale ecosystem partnerships. This is where our recent announcement with one of the major processors, or the largest processor in the world, fits in. This is where a processor within that strategy provides us as an alternative payment method in the systems that they already have in place for both point of sale and for their gateway, their online payments. So the merchants simply need to be able to turn it on. It's already embedded, it's already there. Now, there's a second important aspect to this part of the strategy, and that is those processors get a referral fee for bringing Openpay onto that merchant. So essentially, they're an extension of our sales force. And we are providing them an incentive to do that. So both available anywhere that these processors are already processing and have availability. In the case of the most recent one that you heard about, 1.2 million merchants around the world. And the second is an extension of our sales force in the market, incented to help get Openpay, OPPay as we call it in the US, in the market. The fourth pillar is about Americanizing our platform. So this is about making sure we've got all the regulatory requirements and the local preferences for the American consumer and each of the states that have their own rules. For example, things like disclosures that have to happen within the platform. So that is very well underway as well. The fifth area is tuning that product with the merchants. So we have signed up members of the Merchant Advisory Group, the largest consortium of payments-focused executives in the US. These are the largest merchants in the United States, and they are participating to help us design the version of Openpay for the US market. In other words, they have their fingerprints all over the design. It's built for them, with them, and it's really tuned to the US market and what the merchants are looking for in the US, and by vertical. And then the sixth area is pivoting and expanding. So again, if we've replaced your roof because you had a leak, we can then pivot to other areas like replacing the lamp or the rug that might have been ruined as part of that flood. In other words, we're very strong in our verticals, let's say home improvement repairs like the roof, but then we can pivot and provide loans to those customers in direct adjacent areas. And that's a big part of that additional share of market that you saw in the prior slide. Okay, let's go to the next slide. So this is the team that I just wanted to quickly introduce you to. We have Gary Stein, who was the regulator overseeing public policy for the United States for the Consumer Financial Protection Bureau before joining us. So he is the Chief Product and Compliance Officer. That is a really special combination. You get somebody whose job it is to help design the product in the United States, who's also responsible for compliance. I think that's a very powerful combination. We've been meeting with the regulators and they agree. It also brings a lot of comfort to the banks that we work with. Efrat Yellen, who I've known for many years, she worked with me at Deloitte, and she is our CFO, incredibly detail-oriented CFO on top of the numbers in the US and working very closely with UC. Troy Carruthers, who was the executive overseeing all of payments for one of the largest retailers in the United States. He was also at Citi, so on the banking side. But Troy really understands how the merchants think. He was actually the chairman of the board for the Merchant Advisory Group, which I mentioned earlier, that's helping us design and Americanize the product for the merchants. And Larry Wine, who's been the president of WorldPay, as well as the CEO of Paymetric and a company called Bakkt. This is a serial fintech successful C-suite executive. Really a great team that I just wanted to introduce you to here. Okay. So I think that's it. Oh, we have an example here we wanted to show you with EasyVet, where we have a vertical. You know, in healthcare, we also consider veterinarian an important part of healthcare. And the reason I really want to focus on this example today is veterinarian is something that consumers continue to spend in upturns and downturns. They're very, very loyal. It's a very safe, resilient subcategory. These sub-verticals are really important because we can then pick where we take our bets. And some of the sub-verticals within education and healthcare are riskier than others. This happens to be a great area. And if you look at EasyVet, they have over 2,000 practices globally, with more than 1,200 of them in the United States. I just actually had my two Labrador retrievers had their dental work done, and it was $400 each. That's $800 to have your pet's teeth cleaned. So it's a great area, great sector for us. And we were working with them internationally, and they're traveling with us to the United States. So that's quite exciting to be able to take those relationships and bring them to the United States. All right, we have others in dental and allied health and optometry and audiology that are also some of these sub-verticals that are just so promising and very low loss rates and a very, very high relevance for our product offering. Okay, I believe that's the last slide. UC and Michael, back over to you guys.
Thank you, Brian. And really to reiterate what Brian's just outlined in terms of our 6 pillars US market entry strategy, and entering into these strategic partnerships to provide us with scale at speed. We really do believe that the opportunity is in front of us right now, and that moving with urgency to deliver on that strategy is really key to us. So to that end, we're very pleased to have delivered a capital raise with a corporate debt package and a follow-on share purchase plan expected to total approximately $67.5 million. These funds will allow us to make significant progress with our strategy in the form of developing platform capability in the US and significant early stage acquisition and funding of book growth. In addition to this funding will allow us to acquire and grow both B2C and B2B business within existing and new verticals in the UK and Australia. So exactly here then on page 11, we can see the breakdown of the expected funding amount of 67.5 million as firstly a placement of 37.5 million, which is supported by a corporate debt facility of 25 million, which can be used for general working capital purposes or indeed funding book growth if required. Finally, as Michael mentioned as well, a non-underwritten share purchase plan or SPP will also take place over April and May with a view to raising an additional $5 million from existing Openpay shareholders. The key terms and timing of the SPP are outlined on page 12. Thank you, Jane. Including the $2.03 per share raise price, which mirrors the placement price and is available to eligible investors. Further on this, the terms and conditions of the SPP will be lodged, again, as Michael mentioned, with the ASX later this week, with notification sent to eligible investors very shortly thereafter. The SPP offer period will close on the 4th of May, with an expected quotation date of new share issues on the 14th of May as well. Okay, so those are the key pieces of that. And if we transition to page 13, thank you again, Jane, we can see that the proceeds of the raise will really be deployed to the largest part towards growth in the US at 40% of all funding received, with the remainder being equally allocated between the UK and Australia. In the US, the investment delivers us key platform capability as per the 6-pillar strategy and early stage book growth, whereas in the UK and Australia, we'll be able to acquire and integrate new merchants within both the buy now, pay smarter space across existing and new verticals, as well as within our OP Pro, or what we know as the B2B platform. Okay, the next page, finally page 14, just wanted to illustrate, and we can really see how this pro forma funding position allows us to take that next step in our growth strategy and really accelerate US market entry. Okay, so but please note that in this context, the resulting pro forma funding position really takes our latest reported cash and funding runway position. I believe it was 173 million as at December 20, to which we then add the expected current raise and corporate debt amounts to get approximately $240 million. Clearly, since December, there have been some movements in the financial statements. However, it really provides an appropriate and approximate magnitude of funding position that we're talking about here. So that was very important to say. And yeah, then really to wrap us up, I'd like to hand over to Michael, who will summarize the current investment opportunity. After which I believe we have some time for a Q&A. So thank you very much, Michael, and over to you.
Thank you, Jussi, and thank you, Brian. This gets us to the last page of this presentation. Thank you. So we have, with what we have heard, all reason to believe that our formula of larger, longer and customized payment plans and our aggregator partnership strategy have the potential for us to own whole industry verticals where people do not only ask for convenient way to pay, what we often kind of summarize with the paying for t-shirts and tennis shoes, but really for a lifelong partner for them to manage their cash flow smartly for life's important investments in their families and pets' health, home, cars, education, sports memberships, etc. These areas are widely untouched by most of our competitors, and they represent a niche, if you like, which is an $829 billion opportunity in the US alone. As we continue to tick the boxes for the pillars of success to launch into the US market, we are at the inflection point of our growth strategy and business performance profile. As we scale our business globally, we can build on global partnerships with aggregators, which Brian has summarized under the wholesale strategy, to provide us access to hundreds of thousands of merchants across our target markets and industries. The share purchase plan, which will be open from 9 April in 2 days' time for eligible shareholders, will close this funding round, which has one single purpose: growth. We look very much forward to keeping investors updated on our progress, and thank you for attending this call this morning. And with that, we will now enter the Q&A part of this call with Jane as our moderator. And over to you, Jane, and thanks again.
Thank you, Michael and Brian and Yusi, for your presentation this morning. With that, I'd like to now open up the session to questions. If you'd like to ask a question, please type it into the Zoom Q&A function via the ribbon on your screen. We've earmarked about 15 minutes for questions today. If we don't manage to get to your question in time, please feel free to follow up with us via investors@openpay.com.au. after this session. I will kick off. We do have quite a number coming through the function there. Perhaps I throw this first one to you, Brian, specifically on the US. So healthcare appears to be the biggest pure vertical you have. What kinds of trends are you seeing related to BNPL in US healthcare? Yeah.
There is, thank you. There is a clear pattern here where the dental industry particularly, and some others, is fatigued with charging very high 27% interest rates to their customers, their patients. It is a very sizable problem. The largest player in that market today is declining about 55% of patients. So more than half of the patients are being turned away, and those that are being provided the existing products are getting charged exorbitant fees. That is perhaps one of the most important trends. But within these other sub-verticals, I think what we find is right now there is a lot of people coming back out to get a lot of procedures that tend to be more out of pocket, more elective, that they've been waiting on for the last few months since the pandemic started. And so there's a tremendous opportunity, very well timed with our US market launch, Jane.
Thank you. Okay, and so just another one and follow up on healthcare. Which areas of healthcare do you expect Openpay to apply best to? We've obviously spoken to that a little bit today, but any extra info there, Brian?
Yeah, well, the areas in dental are applicable, obviously, to broader, broader types of categories that are similar. So orthodontia, rather than specific, or endodontic. So those tend to be very, very strong areas. But also in the ophthalmology area, similar types of programs where the healthcare industry has aggregated and created these groups that help lower the cost of managing back office operations, finance, tax, accounting for the physicians. Anywhere where you see that type of organization is very, very attractive to us. In the insurance space, the insurance providers that are turning down people or telling them they're only partially covered, very, very good space for us, again, at an aggregator level. So hopefully we'll have more to share with you down the road about these, but those are the areas that are most exciting for us right now.
Thank you. One perhaps for you, Michael. So this is about the EasyVet agreement in particular. So that's one that we've talked to in the presentation today with focus both in the US and the UK. So the question is, that takes you into the UK healthcare vertical. How do you see that expansion rolling out into those other verticals in the UK?
Yeah, first of all, thanks, Jane. I think this EasyVet global partnership is a great illustration and example of our global wholesale or aggregator strategy, because The background to this easyvet deal is easyvet have been a partner with us in veterinary in Australia for many years, and it has been a very, very successful partnership. And since we have now launched into the UK verticals officially lately, and now also, as we have heard from Brian, into the US, these partnerships, and this is just one example in Australia, who operate at global scale, they want to take us with them to also enjoy the benefits of these kind of differentiated buy now, pay later for their customers and for their businesses. So it's just another example of what we will take on further down the track and have started already in leveraging on global partnerships in one market, but then take them global. Particularly to the UK, for us, this is a very, very exciting move, because we have been focusing, as the investor community know, on differentiated higher value retail, as also Brian has outlined. There's a lot of demand there, which goes above and beyond pay in 4, typically up to $200 or $300 purchases. And this gives us now the access into the large, very large UK healthcare market on the back of this integration partnership, and more to come. Again, we solve similar problems across the broader healthcare space, starting in one subsector. And also, if you look at in automotive, also in part unforeseen or kind of expectedly high invoices, a bit of a bill shock, and we can also help there to solve a problem for the customer to manage their cash flow smartly and help merchants to convert at higher rates. So more to come in that space globally as well.
Thank you. So question perhaps for Jussi is just on the rationale behind raising capital now. Can you just talk to the timing?
Yeah, no, thank you very much, Jane. Very good question, and really boils down to what Brian, Michael, myself mentioned earlier around really the timing of the opportunity. We really feel strongly it's in front of us right now, and the deals that we have already signed and also the pipeline that we have in front of us, really compelling, and we feel that we need to take that opportunity right now. That is the main driver, but as well, clearly as well, with companies in this time of their life cycle as well, we have very good, robust, good processes and monitoring to ensure that we have adequate and appropriate capital levels and funding levels at all times. So that is always also a key consideration. So, but yeah, I mean, the top reason really is to make sure that we can accelerate now and really leverage on the opportunity in front of us.
Thank you. We have had a question here just about the share price performance with relation to the timing of the capital raise. Michael, I guess the question is, sort of what's being done to improve market appreciation with the share price, if I can put that one to you.
Yeah, as we all know, and for all of us who have been in this business on either side, it's very hard to manage the share price directly. It follows global macro trends like what we have seen lately, as kind of government bond yields have increased. There has been a bit of pivot away from the equity market. Within the equity market, a bit more consideration towards blue chips in financial services and a bit less consideration for tech and fintech stocks. And then there's probably more on the level of the sector in buy now, pay later. Probably the question also, what will the future really be in that sector? Is it about growth only, or will there be a few who will be able to make this a profitable business, kind of create value over time, which we clearly believe we can do with our market leading gross revenue yield and net transaction margin. So from that perspective, what we try to do first of all is really deliver on the promise. We have been delivering over the last 1.5 years since our IPO, really meticulously on what we have promised to do, really leveraging our differentiated product into the UK, growing at scale in our verticals, delivering on B2B, and now having with Woolworth a first very, very important merchant client to drive this business, which is a great addition to our buy now, pay smarter product. Really focusing on the business performance, I think, is of utmost importance. And this is why, as Jussi has alluded to, we have not decided to make this capital raise now, because the opportunity to invest in the opportunity in the US, in the UK is really now to accelerate our growth profile. But what we also try to do is to communicate well what we do, how we differentiate. We have invited to this call. We do a lot of information sessions in different formats to inform the market about the opportunity with Openpay particularly. And we see now increasingly also the success of investors understanding what we stand for and what the differentiated opportunity of investing in Openpay would be. And this has also led to a quite heavily oversubscribed first kind of institutional placement last week. And we also hope to attract kind of existing retail investors for this upcoming share purchase plan.
Thank you. Okay, so perhaps a question just sort of looking forward. And maybe one for you, Michael. Which other sectors and verticals are you focusing on for Australian and international expansion?
Yeah, good question. I think overall, what we want is to deliver a consistent value to the customers who want to use us as a budgeting tool for these kind of investments into their lives, which are important, which are very often relationship-based, which are for themselves and for their families and for their pets. And if you think about those, which we have launched into already over the last few years and growing very, very significantly, auto, health, home. We have last year also launched into sports memberships and online education, which I think fits the profile very, very nicely. And there are others which we are considering further down the track. Think of school fees, very expensive, but I think just another part of the budget of a family, what they want the best education for their kids. So what these parents, including myself, by the way, really have been screaming out for a long time is something like, can I spread the quarterly school fees over a longer period of time? And probably there's a great opportunity for us in this adjacent space. And think of utility bills, recurring payments into, again, foundational parts of your lifestyle would be another opportunity. So there's more, and we will explore one after the other. But I think that the current focus really is now to launch into our verticals in the UK and take the once in a lifetime opportunity in the US, as talked about today.
Thank you. Okay, so thank you for this question, Danny Eunice. You paint an enormous potential market. Can you give an idea of what levels of market share or transaction value you'd like to achieve in the medium term as you roll out new relationships across the segments? Perhaps one for you, Michael.
I will pass this on to Brian in a second, just to talk about the US opportunity itself. But if we take a very conservative approach, let's take the $829 billion opportunity in our target verticals, and let's be conservative. And we start with a percent market share in the first 2 years, and then what we typically see in sectors and in individual kind of merchants where we can own quite easily 5% of the addressable opportunity. I think you can all do your math what that means. It will be a quantum leap for the company in our business performance profile, really getting us to the next S curve. And again, what we have outlined here is conservative, but we see a massive opportunities. And again, the market is so big, and the solutions today with credit cards so bad or paid for, who just touch a bit on the area where we really believe we can make a difference. I think this is a multi-billion TTV opportunity for us over the next few years as a company in these verticals.
And I'm going to work backwards from that last statement, multi-billion TTV. So let's take a look at this. If you have a partnership with processors that have 1.2, some might have a million merchants. When you have those kinds of relationships, your access to those verticals and sub-verticals that you really want is already in place. That's the key here. There's 2 points. One, if they're working with one of the largest processors in the world to be able to accept credit cards through that processor, and Openpay is already integrated, it's already there. They just have to decide to use it. So that's number one. Number two is selling it. These deals that we're cutting with the processors allow us to give them some referral fees. So they are an extension. That combination drives billions, not hundreds of millions in transaction value. Let's look at the micro numbers. I want to give you some numbers here. On the merchant aggregators, a typical dental service organization that we would focus on has about 1,000 dentists. Each dentist has anywhere from 1,000 to 1,500 patients. That's over 1 million patients. You can do the math and see that at $1,400, $1,200 to $1,400 average per treatment cost, you get into the hundreds of millions of dollars in TTV pretty quickly, right? Now you look across multiple of these DSOs and the insurance companies that scale even bigger. Those are the variables that we're working with here. Well, we can't give you forward-looking projections. You could take these numbers and you could pretty quickly see how we get to billions, not millions or even hundreds of millions in transaction values. It's significant. This strategy, as Michael said, takes us to a completely different level of scale. It's very exciting and it's working. That's the key here. This is not just a promise. We're checking these boxes.
Terrific, thank you. So just on checking the boxes, a good follow-on question from that is, what does the pipeline of other global partnerships look like?
We've had conversations with 5 other major processors. Right? We don't have anything to announce, but they are now coming to us. The last 2 came to us. So the conversations are very active, very productive. They see the difference. They see the difference. The reason some of these, including one of the largest or the largest, has chosen to work with us is there is a differentiation in the products. Having something that's much more merchant and consumer friendly and goes larger and longer with no interest makes a big difference. And that's what's happening.
Thank you. Okay, I'm conscious of time, so I think we might just run with 2 final questions and then we'll wrap up. So the first one is on regulation. In reference to the future of the company, what are now and what will be regulatory challenges that the company faces that may materially impact its future value? Michael, perhaps one for you.
Yeah. I would not call this a regulatory challenge. I would call it a regulatory opportunity. And why do I say regulatory opportunity? First of all, and I hope this has become clear over the years now, as we probably have been the adult in the room of responsible buy now, pay later providers, we have adhered to the high standards of responsible lending, even though we are not regulated under the National Credit Code in Australia yet. And for us, in what we do, helping people to invest in their lifestyle, families, the health of pets, education, the safety and performance of cars, this is all responsible investments of responsible people. And why would the provider like ourselves not be leading the market in how we provide a responsible lending product with fully transparent fees, which people are aware of upfront, no hidden catches, not these exorbitantly high interest rates, which even other buy now, pay later providers charge their customers. We feel already with our differentiated approach on the very responsible end of the spectrum. And by the way, in Australia, we have a credit license available. We just haven't used it yet because the regulations in Australia are different. In the UK and the US, we actively work with the regulators to obtain credit licenses. We have hired the policymaker of the National Consumer Finance Protection Bureau in the US, who is now our Chief Product and Compliance Officer, really looking at getting it right for the customer, but also for the regulator. This is what for us is an opportunity to continue to differentiate in what we do. And from that perspective, I guess more a challenge for others rather than for ourselves.
Excellent, thank you. We might make this the last one. It seems a nice one to end on. So what milestones can investors look forward to over the next few months?
Maybe for the US, Brian, for you, and then I take it a bit more broadly.
Yes, you notice that in each of those pillars, there's checks, and you notice some are different color than others. What that tells you is we have very advanced progress in some of those, and some that have the hard check marks, I believe they're an amber color, are really complete as far as at least one example goes, but you're going to start to see multiple examples in each of those pillars. We're not done when we have one partner in a key pillar. We're going to have multiple partners. We're not done when we tell you that we're hiring some of the greatest people in the world. In fact, we've just brought on board a chief credit person. So some really incredible talent. You're going to see that same promise that we've made to you with those check boxes, those proof points, continue to be populated. You're going to see some really great information about verticals and progress we're making in the sub-verticals, some of which we talked about today, others that we haven't. So I would really suggest you kind of watch that as the game board, if you will, and you'll see how all the pieces get addressed moving forward.
And just to build on what Brian says, and above and beyond the US opportunity, there are 3 others which we are heavily focusing on and expecting some further news to come over the next few months. First of all, as mentioned this call, the further launch into our differentiated verticals in the UK, in health and in auto. Second, B2B. We are working on some exciting opportunity in the B2B space with enterprise merchants to get into the broader market and obviously continue to scale in onboarding business customers of Woolworth. And the third one, which is also very, very important, is get the right funding partners for the build out of the receivables book, which will be quite significant pretty soon, particularly in the US, in this huge market, working with a number of specialized debt funding providers, including our existing ones, but also banks, regional banks and investment banks on a deal kind of funding structures, which will allow us to lower costs to really scale also from the perspective of building out our receivables book. So these are really the 3 further strategic priorities for us, but obviously the US is the big prize to win. So more to come in that space.
Excellent. Thanks, Michael. One final comment from me before passing across to you to close out. There have been some questions through the chat about analyst coverage, etc. A good place to look for that with information on target pricing, etc. is all up on the investors section of the Openpay website at openpay.com.au. So with that, Michael, I might pass back to you for closing comments.
Yeah, I want to thank everyone who has been on the call this morning or this afternoon, evening, wherever you have been for attending and becoming part of the exciting journey for us to now scale our business globally with the entrance into the US market, also on the back of the recent capital raise. And as Jane said, please reach out to Brian and myself on the back end of the investor presentation. You find our addresses, and we are looking forward to updating you in due course of further milestones in launching into the US, but also the other 3 strategic priorities. Have a good day and a good evening. Thank you.